Hey folks, Dan Frio here, your federally licensed mortgage loan officer, where today we're going to talk about, well, that phrase that we used to hear, date the rate and marry the house. Well, now it's getting to the point, if you did that, at what point do you marry the rate? So in today's topic, we're going to talk about the 5 reasons why most people do not, and I repeat myself, do not refinance, even if they have a 7, maybe an 8% interest rates. And while the interest rates are in the 6s, why do most people not refinance? Well, let's get over to it. So what I did is I jumped into AI and I said, what are the top 5 reasons that people just don't refinance their mortgage, even when they have complaints about having a much higher interest rate than there are today? Well, miraculously, here's the answers to these. So I want to go down through these and either explain them to you, break it down for you, or maybe even just debunk them. So let's get over to the top 5 reasons people avoid refinancing. Number 1, low rate locked in. You already have a lower rate. Let's say your rate's 2 or 3%. So obviously, don't lock in. We're talking to those out there that basically they're dating the rate but married the house. But if you're actually locked in at a low rate and you have a lot of other equity in your house and you have maybe a lot of other debt, can you actually capture that equity and without turning in that maybe that low rate that you currently have? Well, we're going to talk about that in this video as well. But we want to really discuss the reasons why people aren't refinancing that primary mortgage they have. So number 2 we're going to get to is the closing cost. Now that is a big piece of the puzzle because when you bought your home, you most likely, when you got the disclosures, you probably sat there and scratched your head and said, okay, I have to put down a down payment. I have to pay my realtor and I have to pay closing costs. Where am I going to come up with all this money? Well, the good news is when you're refinancing a house, the closing costs are a fraction of what they are when you buy the home. And I'm going to show that to you in an example as well. Then you might also say, well, you're going to be selling your home soon. Well, are you going to sell it? Are you kicking around the idea to sell it? How long would it take you to sell? So during our revisions here or our analysis here, we're going to break down how quick you can recover your closing costs. So let's say next spring I'm going to sell or next summer I'm going to sell. Can you refinance, make all the closing costs make sense and save money over the long term? I'll go over that as well. You might say you might have some credit issues or income issues at this point. Well, there are programs that you can refinance where you don't need an appraisal. You don't need to really pull your credit as long as your credit scores are okay and you haven't missed a mortgage payment in the last 12 months. You might be eligible for some of the refinance products out there and you just don't know about it. Coming up to the last one, you just don't know about it. It's the lack of knowledge. So let's start jumping into these. First off, wonder if you have a lower rate. Well, we have a thing here on our channel. If you go to the rateupdate.com, if you're actually locked in at like a 2 or 3 or 4% interest rate, but you have a lot of equity you want to tap into, well, check and see if our 5-day home equity program will work for you. Just go to the rateupdate.com. You're going to click there. This thing is 100% automated, and you can get your funds in as quick as up to 5 business days. But if this one doesn't work for you, there might be a second lien position or something else that we can help you with. So that's if you have a low rate mortgage now. You don't really need to refinance, but this will just give you an option on how to tap into that equity, maybe get some of those high interest rate credit cards paid off. Okay, so what is that number 2 question? Closing costs too high. This should be your number 1 question that you have. What are my closing costs? Obviously, you want to know the rate, but rates, you can be bamboozled when it comes to rates. I can say, I can get you a 5.99 rate, and then that's where your closing costs come in. So let's go over and see what closing costs look like if you're going to refinance versus buy. So what I did through here is I created an account. This person is buying a $1 million home in Chicago. I just wanted to show you what the title fees are when you're looking to buy versus what they are if you're looking to refinance. So I did an extreme version here. I did a $1 million purchase. So let's go through and say we did a $1 million purchase. What would be my closing costs? Well, here's a function that we have within our system. We go down through here and we have a review the fees section. But if we really don't know, for example, if you're purchasing a house and I don't know you, I don't know the seller, I don't know the attorneys, I don't know what title company they're going to pick. So what we use is what we call the smarts feed calculator. So what I'm going to do in this presentation, let's just click this and let's figure out what the fees are going to be for this transaction. So if you're looking to buy in Cook County, Illinois, you're buying $1 million home, putting down 20%. Your fees are right through here. They're going to be, what this system does, it actually scans the state, it actually scans the county, and actually scans the city to find the most prevalent used title company in the area. And well, here it is. So I'm going to import those fees in, and you're going to see they're populate in the system right through here. So now here's the section that it's going to fill in. It's going to fill in section C and section E. Okay, so that's what we have through there. What are the costs if you're buying? Well, it's going to be $6,000 in title fees and another $12,000 in recording and all kind of other stuff. Okay, but if you're refinancing, let's do this. We're going to go back to Johnny Test, and we're going to change his loan program from a purchase that you're seeing right through here to a refinance. So let's click over to that, just hit confirm. And all this is doing is saying now this person's looking to refinance. They're just doing a rate and term, which means they're not taking any cash out or anything. Well, let's save this. And now let's rerun their fee chart. So all this thing is really doing is reading what kind of loan it is and then your area to figure out what those title fees would be. So let's go down here and we're going to look at the fees here. So remember, this was $6,000 and $12,000. Okay, if you're doing this as a refinance, well, let's go back through and scan these products and scan the companies and scan what these costs are going to be for us. It comes through and they are now what? Well, let's import the fees so you can see them. And now we got the fees here at $1,300 and the fees down through here at $200. You see, it's $1,500 now versus what was it, $18,000. So now your break-even point can be a fraction, because if you didn't know that your closing costs would be a fraction there versus purchasing, well, you just hopefully learned it. So you can see how we went almost from $18,000 to down to like $1,500 in closing costs just by making it a refinance transaction. So hopefully that debunked the closing costs are too high. Now, that's not common in all areas, but it is common in most parts of the United States. Some areas like Florida, Texas, California get a little more expensive, but nowhere close to what it was when you purchased it. Okay, so now you might say, well, I'm selling the house soon. So let's address that. So let's say, for example, let's run a scenario through. So in my calculations and on our website, we actually have a mortgage calculator. So if you go to our website, therateupdate.com, you can go to all calculators, click that. Used in videos, you're going to click that, and then what you're going to do is you're going to click up our refinance calculator. So what I did here is this is a client, actually a layout of a client that we closed last October. Last October was basically the highest point that we've seen in the last 4 or 5 years when it comes to interest rates. So rates went all the way up to 8.25% in some situations. But let's go in this one and say this person bought a $425,000. Well, they had a $425,000 loan amount. Okay, the rate's 7.875, 30-year fixed. It closed in October of 2023. That means their mortgage payment, principal and interest, if you scroll right up through here, I know it's a little bit tight. Let me see if I can bring that in for us a little bit, would be $3,082. Okay, so now let's go down through here. We're going to refinance them. Right now they owe $422,500. Total closing costs. Let's say this was the one in Illinois. Let's say that closing cost was $1,500, folks. You saw it there. $1,500. They didn't need an appraisal. So it's $1,500. We're getting them a 6.75 rate. What is this doing for them? Well, if you go up through here, these people are going to save $341 a month. Okay, so here's the one big important piece of the puzzle you should look at. What's your break-even point? This one, they would break even in 4 months. So anytime over 4 months, you'd be saving $341 a month. So let's assume that next spring, possibly, you might think of putting your house on the market. Well, if you can refinance right now, recover all your closing costs by the end of the year, then let's say you put your house on the market or you don't, or it gets delayed a little bit longer or some things, you're missing out on saving over $300 a month if you don't do this. So that's just another reason why maybe, just maybe, you don't kick the can down the street and not refinance. And then credit and income issues. Now let's break that down. Here's what I want to show you in regards to different mortgage programs. So if we go over to here, here's what I want to show you. Different mortgage types have different requirements when it comes to refinancing. There are some that don't require any income verification. There's some that don't require an appraisal. So just think of that. All we have to do is pull your credit. And in many cases, that's what's happening. The only loan type that doesn't do that is conventional. So let's break down some of the conventional loan terms you can do if you're looking to refinance. You can do what's called a rate and term. Basically, you're just taking your current balance and you're refinancing it to a different rate, maybe probably a lower rate, or a shortened term, or you might be extending your term. That's it. You're not looking to cash out any additional money. Okay, so what this is, it's usually easy. Sometimes you need an appraisal, sometimes you don't. It depends on when we run your loan through Fannie Mae and Freddie Mac. It's a little confusing, I know, but they'll determine if an appraisal is needed or not. Sometimes on refinances, it's not required, but in almost all cases, we do have to verify your income, which goes across through here. So mortgage insurance, is it required? Yes, it's required if you have a loan to value over 80%. So that's that. Cash out allowed. Yes, you can do a cash out refinance up to 80%. So that is the conventional loan terms. You can do rate and term, cash out. You need a 620 minimum credit score, and most likely you're going to need all your income documents and also an appraisal. Okay, so now let's get over to FHA. If you're looking to refinance, FHA, VA, and USDA are probably the easiest programs to refinance. Why? Well, you can do what we call an FHA streamline right through here. What it is you don't need, here, what are these appraisal requirements? No. MIP will continue, so you'll continue to have your mortgage insurance. But also, if you go down through here, is cash out allowed on the streamline? No. So you don't need to verify your income, and we don't need an appraisal on an FHA streamline. Makes it really fast. You can usually get these loans closed in as short as 10 business days. You can also do an FHA cash out up to 80%, but that would require an appraisal, and that also would require your income documentations. VA is the same thing, but when I was going through this and analyzing this came in wrong right through here. If you're a VA, if you're a veteran and looking at your mortgage, you can do what's called a VA IRRRL. It's a streamline, same thing. If your credit is good enough, you haven't missed any mortgage payments in the last year, you don't need an reappraisal done because we're okay with the value where it was. And since you paid every time on time, we don't even need to re-verify your income. So basically, it's just a bunch of paperwork that we'll handle on your behalf to get you from the rate you are to a lower rate. And usually, VA is wanting you to reduce your rate at least 0.5%. You can do a VA cash out. So if you're buried in debt right now, you can do it all the way up to, this has been updated to 100%. So now you can go with a VA cash out loan up to 100% of your home's value. And then USDA. USDA has the same thing. If you have a USDA loan right now, let's say your rate is 775, you can take advantage of these programs as well with the USDA streamline. Again, no appraisal, no income requirements. We have to pull your credit to make sure your credit's still in check and you haven't missed a mortgage payment, but it can be done in that environment as well. You cannot do a cash out on a USDA loan, so that's your options through there. So hopefully with this, it debunked some of these things that we talked about just now, because credit and income, if your credit scores, it doesn't really matter if it's FHA or VA, you're still going to get probably a pretty darn good rate, and it has to be at least 0.5% lower than where you have it now. But again, all we're doing is pulling your credit. We don't have to re-verify your income. We don't even have to get your house reappraised. Think how easy that's going to be. Now, the lack of knowledge piece, hopefully we just resolved with my whole video. So hopefully based on this information, I took some of the question marks out of your concerns when it comes to should I refinance, when should I refinance, and don't wait for that rate to continue to go down and down and down and down, because I'm not expecting rates to really drop further from here. I'm seeing about 6.5 in my wheelhouse in the next probably 30, 60, 90 days. We just might get to 6.25 by the end of the year, but what I'm expecting right now is basically rates about 6.5% from the Q3 and Q4 of 2025, and then 2026, well, we'll wait for that at that time. So hopefully you found out how to refinance today, when it might make sense, and hopefully I can give you a bunch of tools up here, our mortgage calculators and more, that you can figure out, is it saving you enough money to refinance? If it is, hopefully you'll reach out to us so we can assist. So my name is Dan Frio, folks. I hope you enjoy my videos. videos. I'm a federally licensed mortgage loan officer. It means I'm licensed in all 50 states as well as Puerto Rico. And our slogan here is one application, one credit pool. We're going to compare rates up to 30 different lenders for you. How do we do that? Well, basically the federal bank I work with right now, we're set up with 33 other lenders. And that allows me to use their rates, their programs, even programs like this. Are you looking for up to $7,000 on down payment assistance if you're looking to buy a house? Check this out. If you're looking to refinance your current mortgage, or you got a quote right now and you want me to compare it to up to 33 other lenders, you can hit the loan estimate review right here and I'll review that. And your loan estimate, send you a personalized video right back to explain to you what we can do. And if we can't help you out, I'll be like, God bless you. The quote you got is right in point. Go ahead and take it. But if we can beat them on fees, rate, maybe both of the above, hopefully you guys will be reaching out to me and seeking our assistance when it comes to refinancing. So thanks for watching, folks. God bless. Have a fantastic day. Hope to see you here next time. Bye-bye.